Hello everybody, welcome to the TraderMerlin Show. Happy Monday. Making sure I got my microphone levels all set up for you. I hope you had a great Easter weekend out there, time to reflect on family, friends, and now it's back to brass tacks. Markets open and some nice movers out there. We saw some nice announcements from OPEC with regards to oil, which didn't have the stated impact I thought we would have. We'll talk about that here in just a second. For the show today, we're going to have an interesting one. Kipton Cariaga will be our guest after we do the top 7 markets here. And it's kind of a special show because when I first got started back in the late 90s, I traded with a gentleman named Mitch, and he wrote a letter. Said, why I want my son to be a trader. And I thought it was kind of interesting. And it went around the trading floor for a little bit. I don't know exactly how it went around, but ended up getting a copy of this thing, and I read it, and I thought it was interesting because obviously I think we all would love to spread the knowledge or just the flexibility that trading can offer to anybody. And lo and behold, today I have Mitch's son, Kipton, on the program. So we'll talk with him a little bit later on about maybe what the pressures were like from Pops basically telling you got to do this and do that, or maybe the ease of trading underneath parental guidance. So that'll be our focus for today. Let me start off by going over our top 7 markets out there. We have, obviously today being the 13th of April, some fairly decent movers. I will start with the best or worst performer and then work our way up to first. Russell 2000 took your 7th place finish out there today. You can see from the 5-minute here, it did have a nice rally near the end of the day. I don't know why Bollinger Bands are on my screen today, but we'll take those off here in just a second because that's going to be distracting for just about everybody out there. I know we have some people love Bollinger Bands, but I want to get rid of them. All right, so there is your Russell 2000 for today. It was looking the best over the past couple of weeks as it finally broke through some of these interim highs. Looking real strong today. Pretty much opened at its dead high and sold off most of the trading session. At the end of the day, when the dust settled, Russell 2000 was at 1,212. That was a slide of 2.78% or about 34 points. Now, normally we would see an index right behind that, but no. We've got Bitcoin. Bitcoin is down actually a little bit more than that, and this is maybe leapfrog. Let me refresh this because as we know, Bitcoin can move so friggin' fast, it's ridiculous. Right now, Bitcoin is down 3.96%, so that actually would be your worst performer on the day. 6,879 is where it's at right now. All right, I'm going to move on up to crude oil. You guys know I told you I had one long crude oil contract over the weekend. Really thought we'd start to see some announcements from OPEC, which we did. Hey, they cut 9.5 million barrels. And, of course, you want watermarks? Mark says, well, add watermarks. All right, add watermarks. 9 million barrel cut. We'll see if it actually does transpire. Lo and behold, we saw a nice jump up in the futures, but then it just gave it all back. Right now, you're looking at crude oil actually down on the day by 1.32%. Currently trading at 22.46. Actually, that was the closing price. It's at 22.38, so a couple cents down in the after hours. And I am still holding my crude oil. I know, I'm crazy. All right. Let's see. All right, Big Eb says, was not enough on the cuts. Yeah, it was already telegraphed. It was interesting hearing Mr. Trump say 10 million barrels. A lot of times I don't believe what comes out of his mouth, but I guess that was the target. Didn't quite make it to there, so we're seeing buy the rumor, sell the news in effect with crude oil today. All right, that was number 5, I think. I'm going to go to the S&P 500. I had one S&P short over the weekend, which was nice. That was a good sell for today. You're right now at 27.57 on the S&P. That was a slide of about 1% or 28 points. All right, keep moving up. We got our top 3 here. I'll run through these quickly so I can get to Kipton and not make them wait in the wings anymore. NASDAQ looking great. A lot of this has to do with technology and the FANG stocks, which of course during a quarantine, FANG stocks doing really well. We have NASDAQ Composite up 0.48% on the session. As you can see here, we've got this what's called a hanging man candle formation on the NASDAQ 100 right now, which is technically is a bearish pattern, but I don't really put too much emphasis on the hanging man patterns myself. Top 2 is what we're going to look at. We're going to gold. The GC 1762 is where it's closed at right now. We talked about this one last week, that a nice break above this could lead us right to that next area of supply, which you can see on a larger time frame here. Gold up 0.66% on the day, looking really good. I do think you'll see it hit that higher level up. There was one more level that we had over there, just about that 18. I think we had it mapped out at about 1782 would be the next one that I think we'll see it hitting up to. All right, final one, Treasury yields. I love it. You got people keep asking about the housing market, and I think we talked about this briefly on Friday's show, which was with the housing markets, you have 16 million people filing for initial unemployment claims, which means they will not have a paycheck, so they can't get loans. And I think that could be a challenge for the housing markets going forward. Today, we saw the 10-year yields rising a little bit, about 2.74%, ending the day at 0.749 for the 10-year Treasury yield. As you can see here, a small little doji candle, which really doesn't help us out. And that, my friends, is your top 7 markets for your market update. Now, as I mentioned at the top of this program, one of my favorite things is actually to talk to traders from around the world. A lot of them have been online trading academy instructors. Of course, we'll be switching that up here and trying to broaden the scope of who we bring on the program. And one gentleman I've had the privilege of working with for some time is Kipton Cariaga. And I mentioned at the very beginning his story. I don't actually know how old he was at the time. He'll probably be able to tell us because it was back in 1998 when I first started. And I think I actually met his dad, Mitch, in late 98 or early 1999 in the heyday of the day trading craze where everyone was doing hundreds and hundreds of trades per day. So Kipton and I got back in touch here a couple days ago on social media, and I thought, it'd be great to bring him on the program and kind of share a little bit about this young man who's got a pretty interesting story. So without further ado, let's welcome on Kipton Cariaga. Kipton, how you doing?
I'm good. How are you doing, Merlin?
Fantastic. Let me bring you up full screen out there. There he goes. Look at that nice 4 screen. He's got me beat, guys. I only have 3 screens when I trade at home, and Kipton's got 4. It's an impressive setup you got there, Kipton.
Thanks.
I mentioned at the beginning of the program kind of maybe the pressure that was put on you, but the letter that your dad wrote, which was why I want my son to be a trader, I thought was great. And of course, at the time I was reading it, and I was in my mid to late 20s, didn't really think too much about it. But here I am in hindsight now speaking with the guy that the letter was written to. So I know you probably read a copy. I think I may have sent you a copy of that letter in the past. How was it growing up underneath the guise of a great trader like Mitch?
It was pretty amazing. I remember the early days of being on the trading floor before he was trading from home. I remember people making a ton of money, and I just remember that was something I wanted to do. I didn't really know what they were doing. I just knew that I just saw the money going on the screen, all this green numbers, and I'm like, that sounds great to me. Where do I sign up? Fortunately and unfortunately, when with family, they maybe they'll help you get your foot in the door, but you still have to pay your dues. Mm-hmm. And so, when my dad opened up a trading floor out in China, I flew out to China when I was 18 years old and learned to trade on a trading floor in China that my dad ran, and it was definitely not easy. It was probably one of the hardest things I've ever done in my whole life. Was live in a foreign country, in a third world country for that matter, work graveyard shift, but it was definitely worth it.
Let's go back a little bit here because obviously the trading floor thing I think would be interesting. Let me refresh for the viewers maybe a little bit of understanding of the situation that Mitch and myself were back in. 1998, how old were you back then?
10.
You were 10 years old. You make me feel really freaking old today, but thank you for that. I appreciate it. So you guys, just so you know the context, the trading floor that opened in the late, it actually opened in 1997 in Irvine, California. There were many of those around. But this one was really what they would call a bucket shop, right? It was just a high speed. Basically, if you did more than 20 transactions per day, you got a free seat. Otherwise, you'd have to rent a terminal to trade because back then we didn't have, I have fiber at home. That did not even come close to existing. You had dial-up modems that people were connecting through. So a lot of people came to these trading floors. And back then, most of us were very active. And there was this, out of 180 traders on the floor, there was a small group of about 8 people. And at one point, they put us in this room called the Fishbowl, which was 8 of us in this one small little room headed up by a guy named Adam. Adam was 24, 25 years old, and he was the kingpin of this team, doing probably 600-700 trades per day. I mean, it was just very, very active. My average is about 550 per day. I'm pretty sure Mitch was a lot lower. He wasn't as frenetically trading as us, but he learned a strategy which we'll say was a very niche strategy of high-speed intraday trading. Basically, you're looking at the time and sales. You're looking at the level 2 screen. You're trying to scalp that spread, which was a 16th, a teeny, or 6 1/4 cents at the time. Then fractions come along and things change. So just want to set that context because when Kipton learned, his dad was really a high-speed intraday trader, and I'm pretty sure that the strategy has evolved from that, has it not?
Yeah, absolutely. I mean, when you first started, there was a lot of edge in the markets. There wasn't because of the internet speeds or whatever it was. There was even arbitrage opportunities where the quotes maybe were showing one thing, and maybe the quotes over here were showing another thing, and you could literally just, as many times as you could press the button, you could make money. It was like free money. Imagine if you could just had faster hands, you could just make money faster. That was literally what it was like back then. And then slowly but surely, just like anything, nothing lasts forever. There's the famous saying, this too shall pass.
Right.
Anything really amazing, this too shall pass. And anything really terrible, this too shall pass. And so just like anything, that strategy, the edge got traded out of it, and everybody had to evolve. And so, that's what we did.
When you started off, did you, because I don't know how you started as a trader, right? I'm making the assumption that you were doing kind of high-speed intraday stuff. I mean, at 10 years old, I don't know, when did he actually start grooming you or showing you the steps and processes? Because Mitch is one of the best risk managers I know, and I know that that's part of the staple of your success as well. When did he really start you down that path of saying, okay, come under my wing, let me show you how this works?
Yeah, so my dad, probably, especially during the trading floor, those days when you guys were trading together, he wouldn't have been the highest earner, but he always prided himself in being the most consistent. And his motto was "Don't lose money, risk management first." And so that theme has never left. We've always traded with that thought process. The way we trade, maybe the style has evolved. Once all the edge got traded out of that scalping, and once we switched from fractions to decimals, that's about the time that I started. I started when I was 13 a little bit, but fully started trading full time when I was 18 years old. And by that time, we had already made the switch to decimals. We went from making a few $1,000s a day to making a few $100s a day with that strategy. Yep. And so we had to evolve and change.
It's interesting you say the edge was traded out. I'd like to talk more about that because I think we've got a whole bunch of people out there. And hello, everybody. I haven't given shouts out to everybody that's joining us today on social media, but hello, everybody. If you like Kipton and everybody, give us a thumbs up on this one. There's always an edge in every market time. There's some edge, whether that's a technological edge, a strategic edge. And as Kipton says, that gets traded out. And it was interesting that he brought that point up because the trading floors around the U.S. and probably around the world were very robust. They were packed with people because the spreads were in fractions, meaning the smallest price increment right now is a penny. Back then, it was 6.25 cents. So the spreads were, let's say 6 times more. So you could sit on the bid, buy it, offer out instantly on the ask, maybe get it, you make yourself 6.25 cents. Doesn't sound like much, but on 1,000 shares, you're looking at $62.50 every time you do that. It adds up very quickly. Some are trading in bigger blocks. Decimals come on, and literally in the snap of the fingers, those spreads eroded, and sometimes those spreads were half a point, 50 cents, $1 or more. Now it's a penny. That edge just evaporated. So what's interesting about what Kipton was just saying about Mitch, his dad, was that you have to adapt to whatever that new market dynamic is. This new market dynamic killed people like me, Adam, Jason, and all my really active short-term intraday day traders. From my understanding, some of those people I traded on the trading floor, they don't trade anymore because that's all they knew.
Yeah.
You look at what Kipton is doing now, it's an evolution of what he learned early on, which was high speed. Then it evolves because that edge is gone. What would you say, I don't want to go too much into today, but what would you say your edge is today? Like, what are you focusing on today?
Well, so more and more we switched over to more of position trading. So went from a few seconds of being in a position to a few minutes, to a few hours, and then even a few days now. And so that just over time, I guess we just started holding our positions longer and longer, and started relying more on like supply and demand strategies, and taking a little bit more of an longer outlook on the markets. That's what it's been. However, the thing that has always we've always stayed with was risk management first. Right. Never assuming that we got it figured out, because the minute you think you got it figured out, you're going to get killed.
Yep.
And so always remembering that, I hate to be crass, but remembering that you are the dumbest guy in the room when you're trading. And that's how you survive.
I agree. You may not be the dumbest person in the room, but you have to think that you are. Right? Because then as soon as you get cocky, and I tell people this all the time, I really don't like when people brag about winning trades or boasting, because that's, to me, you're showboating. And really, I prided myself more talking about my losing trades, because I feel like I learned a lot more from those. So you certainly have to be careful with how you present yourself. Always make sure that you know that you'll never know everything about the markets, and these markets will always be changing. A question came in from Joseph here. He says, what do you trade? Walk us through your evolution, because I know you've traded a bunch of different asset classes. I'm pretty sure you started with equities, probably NASDAQ, but walk our viewers through the change that you made and kind of where you are today and what you're trading.
Okay, so yeah, started in stocks, started day trading stocks. That's where we basically cut our teeth, trading stocks, day trading. As we moved more into position trading, started looking at the futures market, and learned some directional strategies just in the straight futures market, the S&P 500, the NASDAQ, and then picked up options. I started with some credit spreads, iron condors, using the directional future strategies that I had learned that were very effective, using supply and demand, and then going out and using some iron condors and collecting that credit. And then I met up with a guy named Ryan, who's now my trading partner, definitely the smarter guy in the group. And so what we're doing now is, instead of just collecting the credit, we're doing position trading, doing just a bunch of different options combinations, with basically, I would call it delta scalping or delta hedging or gamma scalping. But it all has to do with just a little bit more of a longer term outlook on the market, having a thesis of what do you think the market's going to do, and then setting up a position in case it doesn't do that, and then also setting up a position in case it does. Mm-hmm. So what do you do if you're wrong? What do you do if you're right? And you always take care of the what do you do if you're wrong first.
So now you start off in equities, worked up your way up to futures, and now options seem to be your sweet spot, right?
Yes. Now it's completely switched 100% to options, and that's what we're doing now.
You mentioned a couple terms there which may need a little bit of clarification for some viewers, and some are probably understood. Most are probably in the just learning options category. You mentioned delta hedging and gamma scalping. Talk a little bit about delta hedging. What does that mean? So delta hedging or gamma scalping, you can think of it as almost the same thing. Basically, what you're doing is you're trying to capitalize on volatility, as volatility does play a role in options pricing. And so as the market goes up or down, that volatility will go up or down normally inverse to where the market goes. And so if you can take out the delta out of the equation, now you're just basically time and vol. And so that allows you to play on the volatility as it expands and contracts. So volatility low, you buy; volatility high, you sell. Done. Simple, plain and easy. I like your straight shooting answers. There's no fluff in there. All right, so let me go down the path of mentorship, because you are extremely fortunate to have had a mentor like Mitch. And who knows, I'm sure that may have caused some rifts between you at times, a little bit of fighting here and there. As you progress as a trader, what would you say was the most challenging thing for you? Because I think you had a huge competitive advantage having someone like Mitch in your corner, but I'm sure there were challenges along the way that you had to find out your own inner demons, and everybody has to discover who those are. So what were your personal biggest challenges as you kind of found your way to your niche that you're in now?
I think the biggest thing that I had to overcome with the trading was that I'm not naturally a numbers or a math person. And so, like I said before, having my dad, who is definitely one of the greatest traders I've ever met, having somebody like him being able to take me under his wing, mentor me, give me advice, give me perspective, has been great. But at the same time, personally, I still had to earn my stripes, and I'm still earning them. Trust me, I'm still earning them. But it definitely had an advantage. But I would say the hardest thing for me was just, numbers, details. I'm not very detail oriented by nature. I'm not very good with numbers by nature. It's something I had to work on. Just looking at a screen, I remember in the beginning looking at a screen with numbers flashing around when I was 18 years old, I wanted to be an artist. And so, it wasn't easy for me, but, he hammered me. He was like, look, this is going to be, it's for your future. It's for you got to do this. No one can, once you learn it, no one can take it away from you. And he was right. And I look at what's going on right now, just with the economy and the pandemic. I mean, how many people wish they had a skill that they could sit at home and make money? And that's what he gave me. Was that.
It's interesting. I was talking to a buddy of mine yesterday. He's in the streaming media business, and actually two friends. Another one is in internet security, and we were just kind of having a conversation about how fortunate we are, because guys doing internet security can do it from home. Guys doing streaming media, I mean, that's got to be the most booming business right now. And here I am trading from home and actually broadcasting a show every day, which I don't no longer need this massive production studio. I mean, you remember the old studio? That was multi-million dollars. This studio,
it's amazing.
Not multi-million dollars. Let's see. Where was I going to? Any questions from our viewers out there? Let me know if you have something for Kipton that you guys want addressed or answered on today's program. We'll happy to dive into that one. Now, you mentioned that you have obviously a trading partner, which is a huge advantage. You also, you spent many years at Online Trading Academy, and I would say in many senses you were a mentor for people. You weren't really in the instructor side, but you were on the student support and helping out students on the Irvine side. How did that help you?
I think it helped me remember to stay coachable. The most important thing is to, again, remember you're not the smartest person in the room. And so staying coachable, always looking for who's doing it better, who's doing it right now, who's doing good, and asking questions, being willing to sit at the feet of people no matter what their age. I've learned a ton of things from people that are even younger than me. Tons of things from people that are a lot older than me, and everywhere in between. So that's, I think, would be the biggest thing. Stay humble and be coachable.
Nice. A couple questions from the viewers out there. Brennan, one of our regulars, says, how long did it take for you to scale up? Because I'm under the assumption that when you were 13 trading, that was probably dad gave you a little bit of capital and said, okay, you can trade this, or maybe even trade his account, but you had very tight rules. You couldn't trade very big. Obviously, now you're a grown man and doing it on your own. How long did it take you to get to that comfort level where you could actually scale up your account and get to the point where you could, potentially do this for a living?
So, the question of scaling up is going to be different for everybody. But I think that, the person who wants to look at starting small, start small and then scale up, I think the number one thing you need to look at is you don't look at how much money you're necessarily making. You need to look at your risk management. How well are you managing that risk? Also be honest, if you're making money right now in the markets, are you making money just because what you're doing is good for this environment? If the environment changes, will it still work? You got to ask, look yourself in the mirror and ask those tough questions, and really make sure that before you scale up, that you have a solid risk management plan. That's going to be, because you lose a little bit of money in a small account, the same loss could be exponential in a larger account, especially if you're using leverage. So just before you do that, always remember those two things. Ask yourself those hard questions and make sure you have that solid risk management plan. That'd be the key.
Nice. Before the program, I was asking you about social media and things like that. Are there any, I know the answer to this one, but for the viewers out at home, they don't. Are there people that you follow on social media, or are you a news trading kind of guy? How much does that impact you and what you do?
No, I do look at the news to know what's going on in the world. But Honestly, I do know I actually have a really good friend that trades on a big trading team out of New York that they do trade the news. They trade the news by hand, and it's amazing. But you got to understand, once a headline hits the market, you got half a second before that headline gets priced in.
Right.
And so, reading a headline and then making a decision and then buying or selling based on that headline you read, it's going to be very difficult to make money. And so, again, you just gotta, you gotta have a strategy around risk management. That's the number one thing. So if you think that something is going to go up or down based on some kind of headline you read, just make sure, again, that if that doesn't happen, even if it seems like a sure thing, if it doesn't happen, make sure you have a contingency plan.
Yeah.
And for me personally, I read the news, but I don't usually use the news to make decisions in trading.
It's funny, in my 10 laws that I have 10 laws that I wrote years ago, 10 trading laws, and I think it's number 3 says ignore the news but listen to every word of it. It's precisely for that reason, right? Because we can be so quickly influenced by a piece of news that you go, oh, well, shoot, this thing, it's got to go up because look at the news. It can only go up. No, it can go any direction it needs to go. And a lot of that's already priced in. There's a lot of problems out there. I want to add a horrible analogy, which I'm famous for doing with regards to, before you jump in a trade, you said whether you're long or short, it doesn't really matter. You just got to make sure you protect yourselves. I was in, where was I? I was in, not Costa Rica, Puerto Rico. Sound 2 words, it's an island paradise. I went to Puerto Rico last December, and we went on this river hike, really amazing hike. And at this one point, there's this 35-foot, 40-foot rock, and everyone's jumping off of this rock. And to the same vein that you just talked about, it's like, okay, I could follow the lemmings and jump off this cliff and be like, oh, great, I'm cliff diving. And I'm like, well, I need to make sure there's risk management practice here. So I actually went and dove down and around and like, okay, where is this under the water? I trust the guide and all, but I'm jumping off of, let's say a 40-foot cliff. The last thing I want to do is hit any little rock and shatter my leg and have to be airlifted out in some third world country. Not what I want to do. So my brain is going, if there are no rocks and it's just deep water, what's the worst that could happen? I do a face plant, I have a raspberry, I hurt myself, but I'm not going to kill myself. If I hit a rock, I'm going to be seriously injured. So, my risk management was to swim around, find out if there's any damaging things there, and as soon as it was clear, I'm like, all right, let's go jump. But some people in these markets will jump into any situation that somebody tells them to jump into, and that's usually the people who end up failing out there. So there's my bad analogy, Kipton.
I love it. It's because we're traders.
Right.
The risk has to justify the reward.
Let's see. You've got a fan out here in Lewis. He says you're his new role model. Stay hungry and stay humble. Yeah, that's, guys, I've had the privilege of working with Kipton at Online Trading. Or I wouldn't say working with. We weren't exactly in the same department, but we sat pretty close to each other for a little while, and it was great having me. He's a very humble guy, which you'll notice that I don't really bring on cocky assholes on the program. I'm not a fan of people who are just so full of arrogance and full of themselves, and Kipton is certainly not one of those guys. Let's see. Are you willing to share more of your rules? We could talk about rules later on. Let's see. I'm trying to go back through and get some of the more questions here. Elon says, does it cost to learn, or are there jobs that could be trained and paid? I don't know if that's necessarily a question for you, Kipton, but I think, you were involved with Online Trading. Are you still with Online Trading Academy?
No. Okay. No longer. Maybe our paths will cross again in the future, in the near future, maybe, hopefully. But for now, no. All
right. When all the dust settles, who knows what's going to happen? There's a lot of uncertainty there. But for Elon, everybody could learn for free. I mean, you could technically go out into YouTube and spend a ton of time and effort and resources filtering through all the garbage and bad stuff out there to find stuff that actually works. Or you can pay to get an education. And I chose in 1998 to pay to get an education. I'm a paying Online Trading Academy graduate from 98. I believe it was their second class. So, I realized the importance of learning from someone who has a skill set that I want to learn. If I want to be a professional guitar player, I'm not going to go sit with my buddy Tim, who just learned how to play too. I need someone who's going to show me how to do this as fast as possible, get the best routines, the best tactics, so whatever it is I do, I'm going to overcome a lot of the novice mistakes as soon as possible. And, fortunately for Kipton, he had the luxury of having someone to show him the ropes there. And you had an expensive education, but it was cheap, right? Your dad was your teacher.
Yeah, I mean, in regards to that, and if that's the Ilan that I know who it is, that's hi Ilan. He's a good friend of mine. I'm not sure if it is, but it might be.
Probably is. Your fans are here today.
I love Ilan. Ilan's a great guy. So in regards to education, so when my dad first took a class at Online Trading Academy and then got onto the floor, I think the cost was $5,000. I think Online Trading Academy's pricing has significantly gone up since then. But it's not just the knowledge that you get that you're looking for when you're trying to learn how to do this. Whether it's paying for it at an academy or at a institution or whatever it is, or just looking it up online. It's not just the knowledge that you're looking for. You also need some kind of a community around you that's going to show you how to do this in real time. Yep. And I referenced the amount my dad paid, $5,000, but you got to understand, outside of that, he also spent a lot of time and a lot of money in hotels and plane flights, flying all around the world, sitting with guys just for an hour to see what they were doing. And he would fly to New York, he would fly to Asia, he flew to Texas to meet with people and try to pick their brain. And he built a community around himself of other traders that were better than him, that were doing different things than him. And so he could sharpen his skills. I think that having a community around you is so important. And so, having a dad that already had that around him, I think that was definitely a leg up for me. But no matter what, you got to build that. You got to build that support group.
Sure. Yeah, and again, finding people who can teach you the best way to do things with the most efficient process, pretty awesome. And now I was glad to see Mitch after a while. It'd been many years since I'd seen your dad, and actually to see all of a sudden you were back with in the trading world is awesome. AVP says, how can I make it? Ooh, okay. This is a good one. You know this firsthand. I do not know this one, so this has to be your answer. AVP says, question for Kipton. How can I make it learning interesting for my son? Basically, if you were to go back and your dad was to teach you something, did he make it interesting, or were you just innately interested in the subject matter? How could a parent, because I'm sure everybody in this room right now who's a parent would say, damn it, if I could teach my kid this at 10, 12, 15, 20 years old, they'd already be way ahead of anybody in the market. So what would you say would be a piece of advice for anybody looking to teach their kids this?
Yeah, I mean, that's a huge thing. I mean, it depends on how old the kid is. I mean, I was 10 when my dad first started, and I loved it right away. I think for me, it was the prestige. It was the prestige of all the guys, sitting in the fishbowl, and there was like a hierarchy. You had to get to a certain level of trading before you got there, and I think it was the prestige of it that got to me. Mm-hmm. But I would say to that person asking that question, I would say, know your son. What's important to them. Or daughter. Oh yeah, or daughter. Well, I was saying, the person said for your son. Yep. But yeah, or know your kid. Know your kid. What's important to them. And my daughter is now 5. I started her at 3 years old looking at charts, and we call them candles because she likes candles. So we call them candles. We look at them all the time, and I think that most of the time, especially when kids are younger, they spell love, Time. Just spending time with them. Let them sit on your lap. Let them sit next to you. Show them what you're doing. And they'll just naturally be excited because they're doing something with you. Right. I think it's really important.
Yeah, and I think if you could add to that as well, I'm not a parent. I hope to be someday. You could add to that as well the concept of don't make it about money, right? I think you want to make it about, if you're explaining to your children why you're doing this, it's because, look, because of this skill set I'm learning, I have time to spend more time with you. And when we go on vacations, this is what's helping us pay for that. I have more freedom with this than any other profession really that I can think of. Other parents are going to be there gone all day and you have to be home or go to daycare or other things. I get to be there with you. So this, to me, that would be part of the exciting thing as well. Saying, the freedom and lifestyle that trading would afford, not just myself, but my family and my kids as well, to me should be one of the more appealing pieces. So Awesome. Well, Kipton, I don't want to take any more of your time. I appreciate you coming on. Next time we bring you on, this was more like a walk down memory lane and kind of the ins and outs. Next time, maybe we'll, if you don't mind, we'll talk options, and maybe you could show us some strategies or show us some things you're looking at. We've got a few questions about what you're trading, etc. But I gotta wrap up for today, so we'll save that one for another time.
Okay, love to. Thanks for having me on, Merlin.
All right. Yeah, my pleasure, Kipton. Hey, happy trading. Thanks for getting in touch with me. I look forward to having you back on soon.
Yeah, thanks.
All right, take care. Guys, it was Kipton Cariaga giving a little bit of background into his experience from his dad. My story, which if I ever finish my book, you guys will be the first to know. I was introduced to trading at 9 years old, so I beat Kipton by a year. However, mine was totally different. I was rummaging through my dad's. He was building a house, but he had a motorhome. It was motorhome, RV that he was living in while the home was being built. And he had an S&P stock guide that I just found by accident. And I was rummaging through it, and I was like, oh, what's this? So he was trying to explain to me how it worked. And I paper traded for a little while just because I am a numbers guy. So I thought it was fantastic that I could buy something at this price and it would go up to this price. It was amazing, or go down. So I paper traded for a little bit. But then I got into college, and I was going to, initially I wanted to be an engineer, so I studied mechanical engineering, and then I ended up with a finance degree and really became interested in the financial markets because of the way that you could take capital that I've worked hard for and grow that at a greater rate of return than just letting it sit in a savings account. There's a lot of risk involved with that, but that's what got me into it, and I thought it was pretty an exciting path for me to take out there. Everyone has their path and their journey. It's great to have Kipton on the program. Again, I can't believe he was 10 years old when I first met him on that trading floor back in 1998. Crazy, crazy times. Jorge says, or Matt says, why is Australia blue? It's a scratch off. So basically every place I've been to, I'm scratching off. So as soon as I get out of quarantine and can maybe travel some more, I'm really hoping to hit South America and Africa because I haven't touched those continents at all. Probably South America will be the next one, but that's it. I got these really cool scratch off maps of the world over there. I got actually another one over here on my other part of my office. It's just the United States. Maybe one day I'll get it. When I get a better camera, I'll spin it around and show you my whole office over here. Okay, yes, we did get to 100 subscriptions. I was pretty excited about that one. Again, if you guys liked Kipton, which I'm hoping you did, give us a thumbs up on this one. Give us a little check mark down there. Check mark. You can tell I'm really into the Illuminate sessions that we used to teach on. But give us a little thumbs up there for Kipton. I will go to a couple charts here because I want to make sure I get to some of your questions. There were a couple that came in on Amazon. One that came in on Amazon, and it was AMZN. I'll bring this one up here. It's a while back, so I apologize. I can't remember who exactly sent in the question, but it was talking about Amazon coming up to supply and selling off. So let's bring this up to a longer term time frame. Here is your Amazon going into overhead supply. Yes, did I say 100? I meant 1,000. We have 1,000 subscriptions, so thank you guys. Awesome. It was 1,000. It was my goal to get to 1,000. I don't know what the next one is, but we'll get there soon. The question was, what about Amazon? What do we do here with Amazon now? And look, I am not a fan of shorting Amazon. I don't think there's a situation that I'd feel comfortable shorting Amazon, even though you're ripping into supply. I think this whole coronavirus thing is one of the better things to happen to Amazon. I know it sounds absolutely horrible, but look, they're one of the only things that are right back where they were before this all started. And they're probably going to continue to rip up. Even though if you took the word Amazon out of this and said this was some other company, I'd probably feel inclined to say, all right, I'm okay to go short this one. But knowing what the overall market has done, knowing what Amazon is positioned to do, not just with cloud, but also with just delivery from home, because none of us can really leave, I think that Amazon is poised to have a much, much bigger run here. So as much as you want to short it, I'm not touching this one with a 10-foot pole. It's just too risky for me. Natalia says they have drone tech delivery. Yeah, that makes things even easier for them. Who knows what this new normal is going to look like when we are done, when we can finally go outside and go back to normal. I'm never going to shake hands again. I mean, am I going to want to go to a movie theater or a baseball game? I don't know. I don't know how this all translates, but it's certainly going to be different times, and who's going to benefit the most is the ones that we can interact with as a business that has the least points of contact. Software companies, we're talking about Microsoft doing actually rather well. You have social media platforms like Facebook and Twitter and Instagram. Those are all going to rather do really Clik. those will do rather well going forward. So that to me, even though I see a shorting opportunity potential here, I wouldn't take it just because I just think Amazon is way too good. This is the only company I've never an inclination to go short on since it was $30 a share, and I told myself to buy it, and I did not buy it at $30 a share. All right, let me real quickly, just because I want to look at this one, I'll bring up for tomorrow anyway. We do have some announcements going on. And I'm going to make sure I get you to read all those to you guys. Let's go to the calendar here. So for tomorrow, it's not a busy day for the U.S. We just have import prices. The real interesting stuff comes later on in the week. We have a rate statement coming out from Canada, which should be interesting. That'll be on Wednesday. We have obviously crude oil inventories on Wednesday as well. Thursday, actually have Empire State Manufacturing Index, which you guys remember me saying that a negative number on the manufacturing index means contraction. And we were teetering at like the 4 or 5 mark, meaning we're just above stagnation. So they're showing a little bit of expansion on the Empire State Manufacturing Index. The previous number that came out was negative 21.5. That's a significant contraction in manufacturing in the Empire State area. They're expecting it to be 35, negative 35. So it's continually getting worse on the manufacturing front, which is expected. Remember, as those numbers continue to come in much more negative, then all of a sudden we start to have to think about this trend continuing further to the downside, even though many people have been saying in the media in the last 72 hours that we have bottomed and you missed the bottom. I disagree. We'll have to wait and when all the dust settles to see what happens. But we have earnings coming out here soon, and that will be, to me, the determinant. Let me see if I can tell you exactly who's coming out with what with regards to earnings. Normally I have this thing I do called the week ahead, which I have not done, but it's on the list of things to do. Earnings for this week, let me make sure we had... you have Wells Fargo and JP Morgan, Johnson & Johnson tomorrow. Those are big ones, and to me, that is the beginning of the market. Yeah, as Big Eb says, those are going to be pre-market. JP Morgan, let me just make sure that's pre. The way this, let's go all of them. Yeah, before the market opens, you got JP Morgan, Wells Fargo, Johnson & Johnson. After the market, you got JB Hunt. That's for Tuesday. Wednesday, again, you've got Bank of America, United Health, Citigroup, Goldman Sachs, Charles Schwab, PNC Bank, U.S. Bank Corp. I mean, it's a big, big financial day on Wednesday, but it really starts to kick off on Tuesday, and there are some other ones. But I'll let you guys know more about that at the end of the show. I will try to build a segment for the program near the end that kind of gives you an idea of what's going to happen the next day for our economic announcements and earnings as well. All right, that will do it for today's show. Again, if you guys liked the show, give us a thumbs up on the page there. That will certainly help me out. Again, thank you for the 1,000 subscribers on our YouTube channel. The best way to do that is to go to YouTube, type in TraderMerlin, or on iTunes, or on Spotify, and subscribe to those channels there. If you have any questions, I didn't get a chance to read them over the weekend. I will read them as soon as I'm done here with today's show. Go to TraderMerlin.com. You simply click the button there to send me a message, or go directly at TraderMerlin@gmail.com. I put all those into PowerPoint presentations, actually, so I can show them on the screen. Tomorrow, I don't have a guest slated, so I'll probably do a bunch more questions. So if there's something that's just been burning desire, you want me to answer it, hey, I would love to answer that for you. So send them on in at TraderMerlin.com. Again, thank you guys so much. Yes, Kevin, I agree. Let's make it 2,000. Let's make it, I want 1 million. I don't think I'll ever get to 1 million subscribers. But anyway, thank you guys so much for joining the show today. I hope you really enjoyed Kipton, just an amazing young man. I hope that it kind of inspired many of you to go talk to your kids and say, look, here is a profession. You know, I know you want to be an artist. You can still be an artist. This is an art form, but think of the flexibility. No one can take the skill set of trading away from you. That's something that Kipton said that his dad told him. And it's very true. These markets will not disappear. The technology might disappear, but you'll always have some exchange where people are buying and selling shares of securities or some asset. And if you know how supply and demand works, you know how the human brain thinks about these things, you will always have that competitive advantage and be able to fish for the rest of your life. That will do it for today's show, everybody. Thank you so much for joining us. Hope you have a fantastic day, and I will see you tomorrow. Take care.